Good morning, everybody. It's Monday, November 18th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had December corn down a penny and 3/4 at 4.22 1/4. January soybeans were down 7 3/4 at 9.90 3/4, and December Chicago wheat was up 3 1/4 at 5.39 3/4. This morning, we had some sales announcements from the USDA, 30,000 metric tons of soybean oil to India for 24, 261,264 metric tons of soybeans to Mexico, also for 24, and finally 135,000 metric tons of soybean meal to the Philippines, also for 24. Good morning, guys. Looking at last week and obviously as we start this week, Dustin, fund position, large buyers of corn. And so I think that obviously you kind of saw that. We thought that maybe some of that was going on, but to really only rally about 12 cents or so on all that buying during the week was pretty interesting. So maybe a few thoughts as we start the week, and we'll kick it around the room.
Yeah, thanks, Dan. Yeah, I think it's important to just to notice that transfer of position that happened from just around mid-July till today. And that what we're talking about is, the fact that funds were record short, managed money funds, and the commercial was really, kind of net long. They had completely flipped that position. Almost about 2 billion bushels has been sold from the, from the producer merchant side, mainly growers selling. Right, we knew there's a lot of old crop bushels that still were in the bin that needed to be sold going into that late August timeframe. That's why we hit full carry SEPTA Dece at one point during the delivery window. Market made lows there in August, though, as they cleared out the 23 crop year. Just there really wasn't a ready end user buyer there to take that at that time. But there was a transfer happening gradually through the entire time frame, which was that record net short fund position was slowly buying out. And as of this last week, it was a huge net short reduction, 79,000 contracts on the net short, on just the short side that liquidated. Long side was buying. We're now, getting a fairly decent sized long position starting to be built from managed money funds for corn, and that's as the producer merchant is getting quite short again. So that 2 billion bushel transfer happened from July until now, and it happened on relatively low price volatility. So you couldn't have scripted it better for the funds to get out of a position and build it the other way. The question is, where does it go now? Right now, the funds are starting to get long. Are they going to continue to get longer? Is there a reason for that?
That's good stuff. Justin, we saw a pretty big bump in open interest for oil, up 14,740. I know there was some news there out on Friday as it pertains to China and some tax rebates and things of that nature. Maybe give a few thoughts on that market and what your overall thoughts are from the news on Friday.
Yeah, I think it was, kind of friendly for soybean oil. We've talked about this a lot on this show. Just, the massive, close to 3 billion pounds of used cooking oil that's dumped on our markets, primarily from China. And you can argue that a lot of it's mixed with palm oil, some of these other oils to get those big subsidies. And there was also an export rebate from the Chinese government on top of that. So if it's if these are preliminary things that China is trying to do to maybe prevent larger aggressions or tariffs from the Trump administration, I'm not sure. It could be that they, if you look at world oil prices, kind of took off where, U.S. soybean oil got super cheap. So I think there's a good argument that palm oil, a lot of these oils that have been dumped on the U.S. for the past 2 years, we've started getting tight in those markets. So they're making, they're putting some export curbs in place, and the oil market, the soybean oil market here in the U.S. really took off on, following palm oil, rapeseed oil, these other oils around the world. And some of these other, 45Z, these other, big RFS things that are coming down the pike. And or secondary. So I think it's a pretty bullish, kind of fundamental case. It's always hard whenever you have government involved in subsidies and policy and a new administration coming in. So, market's skittish, but here we are, we're selling oil to India. We're doing some really friendly things here in the oil complex, in my opinion. So that's good. I did want to add one thing to Dustin's comment about commitment of traders. If you think about, just take the U.S. carryout, just make it 2 billion bushels, right? So there's, buyers and sellers. So there's 2 billion bushels that there'll be more sellers than buyers, right? If you just take it really simple as far as a carryover. So when you talk about the funds moving 2 billion bushels, like that's the carryover, and then you look at the index funds are along 264,000 contracts. So there's, I would say that what happens when you get the funds long like 100,000 and the index funds long 264,000, they're basically long the carryout in the U.S. So, if you just take the physical sellers and the physical buyers, like those are in balance at those kind of at that kind of a paper structure. So I think that's what's kind of important is and we've talked about this for a while, it's been cleaning it up. And when we say that, I think it's really in balance now with just the spec ownership, kind of owns the carryover. And now it's, who needs to get stuff bought worse than who needs to sell stuff. So I think I just kind of wanted to point that out there. But,
So what is that answer?
well, it's just, we've obviously seen Mexico be an aggressive buyer. So when you have the funds at the same time that kind of have the excess, owned on paper, I think when you run into, big physical demand, we rally, right? If the farmer's not willing to sell that much in that amount of time frame, I mean, not, more buyers and sellers, not to be oversimplified, but I think that maybe explains the flat price rally, the spread rally, just where that ownership, need to buy, need to sell is. And I think a lot of the selling we've also been attracted in the summer months and new contracts, with some of these currency moves that we've talked about. So I think you've seen natural selling there. You've seen buying in the front end. So a lot of it is order flow and time frames. So I just think it's more of a history lesson. But if you kind of look at what happened with change commitment of traders over the past 4 or 5 months, and what happened with physical purchase, like if you just looked at it all, it kind of makes sense of what happened. It wasn't necessarily obvious at the time, but it kind of makes sense of where we are today. But to Dustin's point, where we go from now, $1 million question, right? It's has Mexico bought enough right now? They're obviously way ahead of a normal pace, or is this going to be a trend for longer into the summer until we get a good South American crop, or any other competitor besides ourselves? So I think U.S. producers are actually in a pretty decent spot right now, as far as like opportunity going forward. I know we're getting a lot of selling here, but I think the case is becoming more friendly. Soybeans have, I think, probably the biggest uphill battle right now, but we're starting to see things in soybean oil and bean complex that are maybe starting to improve those fundamentals a little bit too.
And so, like with the back end of corn, that's just order flow being sold out in the back. Justin, in your opinion, that it's not a.
Yeah, I think it's a combination of things. I think obviously the farm economy right now, bankers, all the things we've talked about are really, really nervous about profitability levels, and there's probably been some selling that just to protect some of that downside. Even though we could go into an hour conversation about why that could be a big mistake, but
sure.
So I think it's some of that, and then South America, Dustin's point out, a lot of times the real down, they're getting relatively good prices for the summer months for safrinha and new crop corn for them. So I think you're getting some selling there. And then whenever you change ownership of 400,000 contracts, most of that buying tends to be in the nearby contracts. When you look at the funds that trade, they typically buy where the biggest volume is, which is up front. So I just think it's a combination of things. I'm probably, with all the business we're doing, people are probably getting bull spread. There's probably 100 different combinations of those positions that make up that 400,000 bushel switch.
Sure. All right, guys. Anything else to add on the grain side there before we head into the open? All right, Ryland, solid turnaround for cattle on Friday, but we're kind of starting to get into a pretty interesting trade in the hogs after, the rally we've been on. So what are your thoughts as we start the week?
Yeah, absolutely. I mean, overall cash was lower. I think the market anticipated this. December is still kind of trending lower, finishing below the 100-day moving average. So in general, it just seems as beef prices slip, cash prices slip. Futures have been trying to get in front of it pretty much the whole time. So, the next 2 weeks seasonally, we do see a little bit of an uptick in demand. So we'll see if we can start to stabilize cash. But overall, it just seems like if we can't see the beef turn around at all, that's going to be pretty tough. So it's just kind of a cautious vibe going into this thing. Plus, we got a cattle on feed report ahead. So we'll be seeing how, the analysts kind of put out their estimates and what the trade starts to think about that. But overall, just kind of feels like, you got a little bit of concern before then, and the managed money is still pretty heavily long this market. So, I mean, I think that's kind of a big downside risk in the longer term. On the hog side of things, the rally looks to be kind of tapering off. Overall, the funds are carrying still a large record position, 120,961 contracts as of Tuesday, but they've since kind of fallen. So I think we are starting to see a little bit of liquidation. Maybe the buying's starting to back off. Maybe there's some of the concerns over, the change in administration and the tariffs that could potentially be put on. Maybe that's starting to lighten up a little bit, but overall, it seems like we're starting to back off a little bit. Cash was down $1.47, but bellies were back up. So I think that's really where the focus is going to be for today. Maybe we can take out some of the longer term moving averages to test that kind of support, and we'll see if they hold today.
Very good. Appreciate the update. A couple of things to point out. We will have crop progress and conditions out at 3:00 Central here this afternoon. People are going to be looking at wheat ratings with some of the rains we've had go through. It should continue to see an improvement there. So again, that'll be out at 3:00 Central. We'll take a look at that and discuss that tomorrow morning in the war room. We are coming up, or we've come up on our 1 year anniversary war room. We are extremely thankful to everybody that tunes in on a daily basis. Appreciate that. And if you wouldn't mind, throw us a like or subscribe. That'll keep you up to speed on everything AgYield. And so again, thanks to everybody that has supported the show and continues to tune in. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. And hope everybody has a good start to the week. And we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.